Okay, week 29, outlook number one. A couple of notes here. I've removed gold as anticipated from the watch list. I actually am primarily focused on NASDAQ for the perceivable future, probably for the rest of the year, but I will continue analyzing the pound futures and also the E-mini Dow futures for those that are, looking to continue trading those. But my primary focus is going to be on the NASDAQ. Now, looking back here, what we have on the pound futures was a liquidity draw from this low, a liquidity draw from that low, which led to basically another liquidity draw of this high here, which led to a run or a break of structure of this high here. And then we started reaching towards the liquidity point, but ultimately reversed and we're starting to move lower. So immediately what we should be looking at is what is going to happen at this low, as there is no inefficiency objects for entry or opportunities. We need to look at the structural object, which is the liquidity point here, and assess, like, is price going to continue to go lower, or are we going to draw more liquidity from this low that will lead us to move higher? That is what the immediate price action is showing us, because we failed to reach the ultimate target, which is this high here. But it's also noted that because we failed to reach this, but we did, strive towards it, we have relatively equal highs. So if the price action is setting up for a run on this high, then this is a key point to see if there is enough liquidity to draw from and then run towards that high. If not, we will probably continue the bearish price action lower, in which we'll see a break of structure and then possibly an efficiency object to enter off of and continue downward. But those are the two scenarios that I am looking for. Is one, I want to see what happens if we get a breaker structure or liquidity draw at this low. If we get a liquidity draw, look for continuation to take out the high. If we get a breaker structure, look for continuation to move lower, aiming for either deeper liquidity pools and efficiency objects or start moving or continuation of the bearish price action. It's never guaranteed that we will reach a target just because we call it out. Price, remember, from the macro perspective, price is in a bearish run. So because we failed to move higher, that's not, it doesn't mean that price is doing the wrong thing. It doesn't mean just because we failed to reach the liquidity point, price is doing the wrong actions. No, remember that we have to adhere to the higher time frame structure. We are in a bearish run, or really I should say we should be adhere to the higher time frame or the macro market phase. And we've identified that as a bearish run. So any excuse for price to continue to run lower, we should be looking for that. And so if we get the break of structure here, we should be looking for continuation of sells. Just because we don't reach this target, similarly as we did not reach the equal highs here, does not mean that price is moving incorrectly or that analysis is wrong. It just means that price is generating liquidity pools that it will come back and balance later, and that is arbitrary in reference to time. Okay, so on the NASDAQ, similarly, we failed to take out this high here. But this, like I said before, this is a very interesting area because it's more of like a consolidation range, which I pointed to the last time we were in this sort of scenario, where tying in a little bit more perspective from the fundamental side, we have a lot of IPOs that are going on. We have a lot of stuff that's happening in the real world that's basically graphically showing as consolidation. The market is uncertain in where it wants to go, but if we pick apart from the price action perspective everything that I've shown you guys, it should be abundantly clear that price is trending lower. Despite us, failing to take out highs or take out lows, we have predominantly had momentum towards the low side and taken out a lot of these sell side or buy side liquidity points, which I really should just call liquidity points. Now, I will take note that this structural point is still intact. So even though we're clearing a lot of liquidity points, the structural point that continues on this bullish run is intact. So it's a very interesting area because the sellers are so strong in this particular price action state, but the predominant pro trend is bullish still. We are still in a bullish run. We are not in a bullish range. We are in a bullish run. So we have to take that into account and be prepared for any possible scenario here. And one of which is the fact that we should, if you know, I'm in this trade here, but if you're not in this opportunity, it would be best to sit on the sidelines because there are no, valid entry models here from my perspective or from my system's perspective. We would have to wait for either a break of structure or liquidity draw at this liquidity point, or a break of structure or liquidity draw at these relatively equal highs, or primarily this liquidity point here. But as you can see, we have a failure to take out this high, and now we're starting to move lower. Well, where are we going to move lower to? Where is price going to respond from? There's no lows in this area other than this one, and this one is tied to an equal low here. But we have to take note that just because we don't have liquidity points in this area, we still are in sort of a bullish price leg, and price can reverse at any point in time. It can generate its own lows and highs in real time in order to achieve an objective. So I would not be surprised if price were to create some sort of low and then start moving towards this high. And I would not be surprised if another scenario is we just get continuation towards breaking this low and then also the structural point. Now, some people, including myself at times in the past, would be like, well, shoot, price should have, why did it reach right here? Why did it create equal highs and not take out the point here? Why would it do that? We're not the market makers. We just have to flow with what the market is giving at the time. Okay. So the two scenarios that we're looking for is either one, we do get the reversal and we have a structural action at this high here, or we get continuation of the bearish price action inside of this bullish price leg, very weird one, towards this low here, and then ultimately the structural point. But we have to be patient with this and not, jump the gun and try to enter in this area, or else you will get chopped up. Okay, so that's that one. And then, okay, now the Dow Jones, there's really not much going on here. We do have the break of structure. We are in we're in a bullish range from the perspective of we have the break of structure of the last structural point inside of this bullish run, which was very tight as we moved in from here to here. And so because we have this structural point here, we have that break of structure, we pulled back, we mitigated this inefficiency object. It is possible that we have some sort of pullback into this area and continue lower, but I'm going to withhold my analysis on this until we get a little bit more clarity, because things are looking pretty interesting right here. I'm not even quite sure, depending on what happens, if this is really going to be the sustaining of this bullish range or identified as a bullish range right now. It is possible that we continue higher this bullish run, but it's yet to be seen. I want to see a little bit more price action. I want to see at least a second break of structure to solidify that we are truly in the bullish range. And if that is true, then I can definitely see this, there's a lot of room for price to displace lower, at least to equilibrium. That's over what, 2,000? Yeah, 2,000 points. So yep, there's a lot of room here for the Dow Jones to play out towards the sell side. All right, that is it for week 29 outlook number 1. Peace.